let's move on and let's talk about the debutant today. We have the management of D Developers joining in. What a strong listing in this market today, over 60% in terms of a premium to its issue price, and that holds on as well. You can see the visuals of the listing itself, which happened at 9:15 today. We're now joined by KL Bansal, who's the chairman and managing director at the company, joining in now. Thanks a lot, Mr. Bansal. Congratulations. It's been a strong listing, momentous day for your company, your teams, as well as your shareholders too. But I remember we spoke the last time. You said that you are looking at margins to sustain between 20 to 22%, and also at the same time looking at profit margins to improve going forward as well. So let's build further on that conversation itself. For the very near term, what is the kind of volume growth that you anticipate in your business, and what's the kind of revenue growth trajectory that you're forecasting?
Thank you so much, sir. Thank you so much, and I shall like to say my gratitude for the strong listing also to all my investors. And now, as far as our strategy is concerned, we are very clear that, since we are already doing 50% of export and 50% in domestic sector, and power sector is coming up with the very high volumes in the near future, and similarly oil and gas also, there are a lot of potential orders which are in the pipelines. So, we are expecting I will say that comparatively much better healthy order book, and it should continue. There shouldn't be any problem as far as the order booking is concerned or order execution is concerned. We are already geared up. We have set up a new plant in Anjar, which is partially commissioned and is likely to be commissioned in near future, and our another plant at Numaligarh is already commissioned fully, and we are working over there on a full-time basis. So, our strategies are in place, our order book is in place, and our future order book also looks good. So, the growth and other things are likely to be on track as expected.
Mr. Bansal, good morning. Thanks a lot for joining in. First of all, many congratulations on your listing. A big day, as Banglam said, for your company, for your investors as well. I'd like to ask you about your order book. As you mentioned that in the December of 2023, it stood at around 828 crores. Could you share a latest number as of March 2024? What was the order book position like?
Sir, I can only tell you that since it's not published as yet, I cannot reveal that. But I can only say that the order book is going to be quite healthy, and it's as per the expectation, and it is as per the trends which are prevalent. So, you really believe me, the order book is going to be quite on track.
All right. Let's look at, back calculating some of your order book versus revenue. So FY21, your revenue was close to around 500 crores. The order book at the end was 335 crores. 434 crores was the order book in FY22 when your revenue was close to around 461 crores. First 9 months of this year, your order book was close to around 830 crores, whereas your revenues were close to around 546 crores. So what are you likely to end this year with, that is FY24? And what are you likely to see in terms of an order inflow in FY25 and the revenue growth in FY25?
Sir, as I just told you, if you will see that, we have the healthiest order book as on December 30th. So, the same trend is going to be there all through the year. And, practically the expectation is that, the whatever order book is required to do this year business, we already have it. And, in future also, in coming future also, there is a very healthy pipeline. So, again, I'm saying that exact numbers I may not be able to reveal, but we have a real healthy order book and an execution strategy in place because of the commissioning of the new plants. We are bound to get good bottom line, and we are bound to get, good EBITDA, ROCs and all other factors.
Mr. Bansal, you also have a facility in Barmer, correct me if I'm wrong, and that is specifically dedicated to meeting the requirements of the HPCL Rajasthan refinery, the piping and erection requirements. Do you get regular order flows from there as well? Could you quantify that in numbers? How much of that is a contribution to your business in general?
So right now it is very less. It's hardly maybe around 2-3% of the total revenue, and we'll continue with that unit, and we are expecting a lot of traction from there. Apart from HRRL refinery, whatever other refineries may be coming in the western sector, that can be that will be an ideal unit to suit that. But it will all depend upon our capacity constraints. We shall use that unit only if there is a capacity constraint in our main unit, which is going to be the Anjar unit and our Palwal unit. But if there is no capacity constraint, then we may just like to keep it idle. But I do not expect that, because a lot of orders, as I'm telling you, are there to execute. So we shall be continuing with that facility to serve the western sector of the country.
I wanted your thoughts on the recent expanded business. I remember we speaking about this when the IPO was open as well. The business vertical of design, engineering, fabrication and manufacturing of pilot plants. You had said that this is an important big opportunity for the industry because there are a lot of pilot plants being constructed. What we didn't get the last time is how big is the addressable market here, and what is your intention of a revenue share from this business?
So the pilot plant, basically, if I try to explain you what a pilot plant means, is that, whenever there is any research and development thing happening, it has to be tried first on a mini scale plant, which we call it as a pilot plant. And, with the government of India's directive of Make in India to all the industries, whether it's a chemical industry or a pharma industry or any other industry, that's why, the need for these pilot plants has grown tremendously over the last 1 year, and we expect it to be multiplied in the coming 3 to 4 years time. And there are as a matter of fact already a lot of inquiries which are already there. Of course, again I am saying that it has a huge potential, and right now if it is 2 to 3%, we may go up to 5 to 7%, 8% also within this year itself.
And over the long term, where do you intend to take this business? I mean, from 3 to 5%, this goes all the way up to 8%. In the long term, do you have a...
Maybe around 10%, maybe around 10%. But, again, I'm saying these are just tentative figures. I cannot really put numbers to my talk right now. But, it is going to be quite hefty.
One final question, Mr. Bansal. What about margins then? Can you share a number on that now going into FY25? What do you expect the year to end with?
Sir, if you will see our historical trend, and if you will see our record even for last 3 years and the audited numbers of last nine months, you will find that it's a upward trend, and we are likely to maintain that upward trend fully. There is not going to be any dip in that, and this is what I can tell you right now, since our numbers are still not published. But we are going to be on track and following the trend which we had been doing, upward trend which we had been doing in all the numbers I am saying.
Right, Mr. Bansal, you've been guarded with some of the commentary that you've given with regards to the numbers. We understand that you will, tell us more when the results do come out. So what we'll do is we'll leave you with a promise that whenever your numbers are reported, you join us here and then give us a detailed outlook into what one can expect going forward as well. But for now, enjoy the day. It's been a good listing for you.